Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for April 4th, 2016. I'm Frank Ochoa, aka PivotBoss, with analysis for the current week. Here's a look at the ES in a daily time frame. What we talked about before was how price rallied into our 2061 target. That was the low end of our long-term target, and the top end is going to be up here in about 77.5. I talked about before that we could see further spillage over 61s and into 77.5, which is the top of the August range, and perhaps even into 84s and a little bit beyond. So we could look at a little bit more strength ahead. One thing to keep in mind is kind of drilling down a little bit in this chart. You'll see right here that prices are holding perfectly above 2061s. So today could be a day where we see upside price discovery at some point, find a high, and this point right here becomes a clear area of support. Breaking that area in an upcoming day could lead to a stops run back downward, which could then again be fodder for another short squeeze. But right now what we're looking for is for some sort of topping pattern. And we haven't quite found the top just yet. But when we do find the top, we're likely going to see some sort of distribution range form and perhaps a trading range develop over the upcoming month. But right now, further upside price discovery until we find that top. If we take a look here at the weekly pivots just for a moment, you can see we have a narrow pivot range. Wasn't quite as narrow as last week, but still fairly narrow. Holding above it now with expansion targets all the way up into 2014 as it pertains to the previous week. Okay, let's take a look now at crude oil. Rather, let's go down to the lower time frame for the ES. Real briefly here, 2061's very, very important. That's been our key level all along. And you can see how price has played to and around that key level time and time again. So that's the major pivot here on a swing basis. I would say above that pivot, bulls want to defend pullbacks for a continuation higher. We have a primary upside target on the week. If we bring up the primary target here, the primary upside target for the week, bringing it up, there it is 2110. So that tells us right now, if the lows of the week are in at 2061, we could see a continuation all the way into 2110, just on average daily range. But failure to hold above 61s opens up the potential to see a push into the downside target, which would then be 2022 from wherever the high is, and currently the high is 2071. So we have some targets on both sides to play to. 2061 is the major pivot. Let's take a look at crude oil. Crude oil has continued lower ever since bouncing off the 42.50 level. That was very important there. It failed to hold above 40s, and I talked about how these participants got stuck and how that could lead to weakness ahead. One thing right now is that price just bounced off the 25% key level from the expansion of this key range. That's the 25% key level. Typically a very solid area of support can be seen at that area, or resistance on the upside. In this case, we're bouncing. So that could lead to a retest of 37.50 to 37.65. Any retest of that area, because of the break and because of the expansion in the 25%, any retest of this area likely to be defended, at least on first test, by bears for a shot at seeing a continuation into 35.17. Remember, this is what I mentioned before. Failure to hold 37.65 opens up a continuation into 35.17. So that's the primary idea. But if you look at this intraday time frame here for crude oil, you can see here we talked about Friday that the primary target was 36.55. We didn't hit that till overnight trading Sunday evening. You can see how bears tried to hold price below that 36.55, which had a dual confluence of pivots at 150% and different key pivots here going into that area. And you can see when price pushed above it and rallied, it came back and held and sealed that level as support in pre-market trading, and you see we're above that prior pivot. So right now, all signs point to bears below 36.55 being squeezed and trapped. That could lead to a move higher into 5-day VPOC. 5-day VPOC right now is much higher here at 38.28, 38.27. So rejecting on these lows the way we have seen here, rejecting these lows and rejecting prices below 36.55 and sitting on it could lead to a 2-day reversal into 38.27. Now, one thing to keep in mind is that 3750 to 3765, that's that major area of resistance. So I would expect bears to come in and defend here, but failure to hold that level opens the door to 3827. Okay, let's take a look at gold here. Gold has pulled back off the midpoint of the, rather the edge of the key range, 1208.30. We have a new June contract that we're tracking now. Basically, the top of this key range here, 1208.30, comes in from this high right here. And you can see bulls have attempted to hold above that level this entire time. So there is definitely sell stops below it. In addition, we now have a composite V pocket, 1202.50 below it. So failure to hold above the support zone, run stops through 1202.5 and likely into the next HVN below, which would take us all the way back toward 1100. So this is a big time area of support. Being able to defend this area of support would suggest a return back toward 1275 for a retest. So this is an important area here. I would say continue to watch 1208 to 1202.5. Failure to hold that zone will open up the stops to the downside for a push back toward previous value. All right, taking a look at the NQ lastly here, we've seen a continued overall upside push with the crude, with key targets being held as well. So right here, basically, when price pushed beyond 43.55, it was important. Price came back and made a support, then pushed through this resistance here, the previous week's high, and then made that support and pushed to new highs. Remember 44.41? That was the area of support I mentioned Friday that needed to be defended by bulls for a continuation higher. It was perfectly defended. Price came within ticks of that area. So key levels have been pushed through and defended on each pass. And I would say right now we could see a little bit more weakness ahead this week, but any pullback should hold above 44.40, 44.41 for a continuation higher, perhaps into 4600. Failure to hold 44.40 opens up a return and a retest of 43.55. So right now, kind of quiet here. I would watch the previous week's high for any signs of failed range expansion short term. So if we look at the intraday time frame, here's the previous week's high. What I mean by that is keep an eye on this level. Any failure to hold above the previous week's high. So if they fail to see acceptance above here and we drop, a retest of 45.29 could offer a selling opportunity back to 44.81. Any rotation downward to begin the week could be a solid buying opportunity for a swing move higher into 4600 the rest of the week. All right, that's it for now. Let's see how this thing plays out heading into the new week of trading. Good luck and trade well.